Hi everybody, this is Gary Dean and this is our nightly video report for Thursday, June 16th, 2016. So we saw a little bit of everything today. We saw the indexes drop pretty hard, and then from there the Dow actually really led this move higher. But the thing is that it's not really coming as a surprise, because we knew that we had bullish divergences. We knew we were nearing a support zone, so you shouldn't have been getting aggressively short, or you should have been placing stops on shorts down in these levels here. Now, I didn't recommend buying, because I just think that buying after just such an extended move like we've had, that's been dragged out with very minimal breathers, what happens is when it does roll over, you don't know where the first level of support is going to hold. And if the 2048 didn't hold, then we were going straight down to the 2024. So it was pretty risky buying here. But it was a good trade. I mean, if you guys had the kahunas to buy, because this was one of the support zones right in between this support zone that I put out in the morning notes, then you had a nice trade. But you don't want to fall in love with it. We could even come back up and test these highs, and the reason why is you got to remember we have this gap up here, so you don't want to be too quick to be jumping on the short side. Give this some time to move. We have the bullish divergences. You want to wait for bearish divergences to set in, and even if it's just a quick move and down again, then it would be setting up a better buying opportunity. But to short right now with bullish divergences, this right here on average, this was at 2039 and made it up to 2085. So almost a 45-point move. So right now we are we made a low right around 2050, I think it was. The low was 2050, and we're up to 2078. So we're 28 points. So let's just say it's going to follow this, the amount of distance from these divergences. It probably still has another 20, 30 points to the upside. So you don't want to get too crazy shorting right now. The damage was done right here, so now you let it reset again. And this is one of the things that the bears are really good at. They don't need to go in one direction all at once. They let things die out, and then it comes straight down. But the thing is, you get these bounces along the way, and it's one of the reasons why, I really like when the market, when volatility's up there, because your divergences actually work, your technicals work. And, so the support area that I was talking about was between 2059, and I had the low down at 2045 or 46. So we were right in this support zone that I was speaking about. So we had the bullish divergences. So jumping aggressively short was not really was not what you wanted to do. And if it broke below that, you still wanted to wait for a bounce before shorting. So I think what's going to happen is here, maybe they come back down and they take these lows out. Maybe they come back up and test this 2085 level, maybe go a little bit higher, but then come back down again and test a 2064 to form an inverted head and shoulders, what it will look like. But it will only be a trap, because what will happen is it's going to pop up. You're going to get everybody buying, and like I said, I'm not ruling out that they can't come up to this 2114. So maybe that's going to be the target, but everyone's going to think that we're breaking out. And when we started seeing the 2150, 2250, 2350 on the S&P, when it was here, we don't hear them anymore. So now when it gets back up there, the pundits will start coming back out again and calling for that number. And all they're going to be doing is setting themselves up for a big bull trap. And, this was a very good attempt at a bear trap, but I think it was just a little too obvious. They mainly catch the bears when there are no divergences and this thing goes straight up. When it's like this, most likely a big part of this was just shorts covering, because they made a lot of money on this move down. So 2085 is resistance, and 2091, just leave the door open that they may come up and try to close this gap before everything is said and done. So maybe build it on the way up in just small pieces, and if it turns down, then you start adding it when it's going down. But I would be very careful on the long side unless you're doing some very, very quick trades. So you can see right here that we made it almost down to the 78% retracement. We didn't have any bullish divergences on the 15-minute chart, but we had them on the 60, so that overturns it. I would give this, like I said, I would give it some room. I'd give it a little bit of time. Let people start believing that the worst is over, and really once they start believing that, that's when you want to start really getting aggressive on the short side. So I'm just putting some fib retracements here, and what you will notice, so we have the 78% retracement. So we have 2093 is going to be tough to get through because it's a fib retracement to 62%. Also, we have the moving average here, and it also this resistance area right here. So if it gets up to 2093, maybe that's when you start. And then if they get it through and you get it quick short covering, add a little more up near to 2105, and then add a little more up here if it gets here. But that's really the way I would manage things. I wouldn't get too aggressive, shorting just yet. Even if they do take the lows out, I still think there would be a larger, rally attempt before the larger drop continues. So with that, I have to leave around 1 tomorrow. But I'll be here most of the day for everything. So until tomorrow, I'll talk to you guys in the morning.